All right, so another huge mistake. People are always calling me up and saying, hey Mike, I see there's great returns in city X or city Y or city Z. Most people have no clue what you're supposed to do when you pick a market. And so I am going to dispel the myths right now, and I'm going to tell you exactly what I do when I'm picking my markets. This is a game changer. It took me a while to figure this out. So the first thing I'm doing, and most people never do this at all, the most important thing is you want to find out if a market is landlord friendly or tenant friendly. And what I mean by that is how long does it take to get rid of a bad tenant? So if you were to invest in Southern California, I spent a ton of time in Southern California, but I will never own a revenue property there, never. And in California, if you get a bad tenant, and they could be not paying any rent, they could be trashing your home. If they know how to work the system, they can stretch it out so they can stay in your home for a year. In some cases, I know of one person who had a tenant stay in their home for 18 months without making a single payment. And I don't know about you, I have never once had my bank call me up and say, hey, you know what, Mike? I hear you're not getting any rent, so you don't have to make your mortgage payment this month. I've never had that happen. If the banks were sympathetic to the fact that I wasn't getting any money, maybe I would consider buying in a place like California. So we contrast that with a place like Atlanta, which is a market that I love, and I can usually get rid of a bad tenant within 3 weeks. I mean, they're gone. They're out of the house. Doesn't matter what they say in court, doesn't matter what they try to do. If they're not paying rent, they're gone. Simple as that. So I want to go to a place where things are in my favor. So one of the things you can do is you can call property managers up in the city that you're thinking of potentially working in. Call them up, ask them how long does it take to legally get rid of a bad tenant. And you only want to go to places where you can get rid of them pretty quick, because your bottom line is going to be deeply affected by how quickly you can get rid of these people that aren't paying you, or if they're trashing your home, you got to get rid of them ASAP. The longer they stay there, the more it's going to cost you. So that's the number one thing, and most people never even look at that. Then the number two thing is, what are my chances for appreciation? I want to get into markets where the homes are going to go up. And there's a good reason for this, because you have a number of ways that you can acquire more properties and scale your business and have a big portfolio in the future. One is you can keep working at your job, saving up down payments, buying more homes, and that's great. That's one way to do it. A much more strategic way to do it, and a way that's going to cost you a lot less money and get you out of your job a whole lot sooner, is to have your properties go up. So a number of years ago when I was heavily invested in Phoenix, that market shot up because of the things I'm going to tell you in a minute that drove it. But it shot up considerably, and I sold off my assets when it made sense. And for every home I sold in Phoenix, I bought 2 in Atlanta. And you could do the same thing, but I didn't have to take more money out of my pocket. So what you want to do is you want to have your previous properties pay for your next set of properties. So how do we figure out where the appreciation is going to be? Well, we're going to look at a couple things. One is population growth. If there's people moving to a certain city, that means that there's going to be upward pressure on the prices because there's going to be demand. You only have so many properties there, and the more people that are looking to buy, the better off you are. Also, the more people moving to a city, the more renters you've got, the more you're going to be able to keep your property filled and keep your vacancy rate low. So we're going to look at population trends. This stuff is all available online. You can look at like citydata.com. There's a whole bunch of websites where you can find out all these statistics for what's going on in a city. And we see a lot of cities up in general, in the northern part of the United States, the population is going to start heading downwards because guess what? All the baby boomers are heading south. Very few people woke up this morning in Florida and said, you know what, Thelma, I think it's time to sell the old property, let's go move to Detroit. Nobody's moving that direction. Nobody wants to go to cold. Retired people do not want to deal with shoveling snow. They want sunshine, they want beaches, they want warmth. There's people moving down there in droves or moving down to the south. The other thing you got to look at is job creation, because people will move where there's jobs. So it's not just retirees that are moving. My favorite tenants are usually working couples with kids. They make great tenants because guess what? You get a nice family in your property, and the mother joins, the PTA, and the father starts coaching soccer. Those people they're not gonna move for a long time. They're gonna stay put as long as you take good care of them. So I'm looking for job creation. And not only am I looking for job creation, I'm looking for job creation in diversified industries. So I'm gonna pick on Detroit again. Sorry if you live in Detroit, but I'm gonna pick on it again. If you have one industry, Detroit is mostly the auto industry, as we all know. Well, when the auto industry was flying high back in the 1950s, real estate was booming. And now, I don't see the auto industry ever recovering. It's always going to be bailed out by the government. They can't compete. The only reason they can even come close to competing is because they put taxes on foreign auto companies to give the American companies a fighting chance. In any case, I'm not here to talk about the auto industry, I'm here to talk about real estate. If you have one industry, if you look at Calgary where I'm from, it's heavily weighted towards oil. So when oil is slumping like it is right now, the house prices are suffering, they're coming down. When oil is booming, well, so is the real estate. I don't like a roller coaster real estate career. I like steady growth. I like to be making money consistently. I don't want to be dealing with a whole bunch of people leaving a city saying, oh, there's no jobs anymore, I got laid off, I got to move to find a job somewhere else. I don't want to be there. I want to be where they're going to. So the key is to be in the path of progress, and the sooner you get there and the further before everybody else gets there, the more money you're going to make. So look for those sort of factors that's the number two thing, that when you're picking a market. So number one, is it landlord friendly? Number two, is there going to be growth? Is there going to be job creation? Is it diversified? In Atlanta, head office to Coca-Cola, Turner Broadcasting, which owns CNN, Delta Airlines, Home Depot, Georgia Pacific Paper, the list goes on and on and on. And all these companies are there because the government gives tax incentives for the businesses. And those businesses hire a lot of people. And those people are my tenants, and they should be your tenants too. So that's the second thing you're going to look for. So after we look at those first two things, the third thing I'm going to look at, and this is the thing that most people go straight to, this is the thing they look at first, and they skip those other two things, and that costs them a lot of money. Number three thing is the return on investment. How much money am I going to make each month with the money I have to take out of my pocket? So ideally, we want to pay as little as possible and get a huge amount of rent. And Atlanta right now is one of the cities that gives us a very nice return on our investment. The homes are relatively inexpensive. Most of the stuff that I deal with is $100,000 to $150,000, which is a lot cheaper than a lot of the United States right now. And it's not going to be like that forever. These homes are below replacement cost. So if they were to burn to the ground, the insurance company couldn't replace them for what I'm paying for them. So those are the things you want to look at when you're picking a market. You don't want to be throwing a dart. You don't want to be saying, oh, well, this is close to home. You don't want to be saying, oh, I love Mickey Mouse, so I'm going to go buy in Orlando. You're not buying for those reasons. You're buying because it makes good business sense. And those three things, if you stick to them, you'll never lose. So a lot of people lost their shirt during the recession. Guess why I didn't? Guess why I flourished and made more money than ever? Because I had those things in place where I knew that I'd get rid of my bad tenants. If they weren't paying, they were gone. I knew that when the economy was good, things would appreciate. And most importantly, I went to markets where I was going to get cash flow. So even if I bought a property for $100,000 tomorrow, and let's say I put $1,000, I got $1,000 rent, and I put $800 in my pocket every month, just as an example. Well, even if that property jumps or drops from $100,000 to $50,000 next month, it's still giving me $800 a month. I don't have to sell it. That means that my investment is sustainable, and I'm in a good spot where I never have to get rid of it until it's the right time. I'm buying when it's low. If it goes lower, guess what? I'm going to buy even more. I'm going to buy more as my rent comes in. I'm going to collect more properties, build up my portfolio. When you stick to those fundamentals and you don't bend from them, you take the emotion out of it, treat it like a business. When you do all that, you're going to get a phenomenal return. You're never going to be in a position where you're going to lose properties to the bank, and you're not going to have to keep working at your job forever. You're going to be able to get out and let these properties help buy you more properties. You're not going to have to keep putting more money in. And that's one of the biggest distinctions between what I do and what most other investors and what they're doing. So if you stick to that, you're going to make a lot more money. You're going to have a way better career, a lot less stress, because you're not going to be dealing with tenants that won't leave. You're going to thank me for this. So I hope you listen to those three factors and start applying them right away.